Guys, a few days ago, someone asked me a simple question. They said, "Smart Money Bro, I want to start investing, but where do I even start?" And it got me thinking when they asked me this question. Most investing videos, they answer that question by telling you what to buy. They jump straight into what stocks to buy and what mutual funds to buy and what ETFs, right? I think that's the wrong place to start. If I had to start investing all over again in 2026, I wouldn't buy a stock. I wouldn't run out and go buy an ETF. In fact, I wouldn't even first open a brokerage account, not until I had an investing system in place. Because here's the deal. Over the long run, it's your system, not your individual investments, that's really going to determine whether you build wealth or not. So in this video, I want to walk you through the exact investing plan that I would follow if I had to start over from scratch right here in 2026. Now, the first thing I would do is I would begin to expand my investing vocabulary. Before you can invest, guys, you need to learn the language of money. You got to know what we mean when we say risk and volatility and expense ratio and dividends and market cap and PE ratios and index funds, right? You got to know what some of those things are. If I was to tell you, hey, you need to look at a Roth IRA, you got to know what a Roth is. What's the difference between a Roth and a regular IRA? You can't make intelligent investing decisions if investing sounds like a foreign language to you. The first thing I would do is I would build up my knowledge of information, because when you have knowledge, it's just simply going to give you confidence, and confidence is what's going to reduce some of the emotional investing that you really don't want to get into. So the first thing I would do is expand my vocabulary, learn the language of money. And you do that by simply reading, understanding, watching new podcasts, watching new YouTube videos. But you got to start learning and be willing to embrace the idea that you've got to increase your knowledge. Now, the second thing I do is I would open up the right accounts. I'd open up the accounts that you actually plan to use. Listen, if your employer offers a retirement match or some type of 401k or 403b match, I would contribute up to the match. Get the full match. Don't leave free money on the table. Then I'd open up a brokerage account also. And whether that be Vanguard, Schwab, Fidelity, Moo, doesn't matter. I'd open up a brokerage account. Takes about 10 or 15 minutes. And I would decide, do I want to start with a traditional IRA? If it's appropriate for you, do I want to start with a Roth IRA, or do I just want to start with ETFs and bonds and individual stocks? But here's the deal. When you open up a brokerage account, you don't have to spend weeks trying to compare which broker is which. Just go through them and figure out what works for you. Choose the one that you trust and get started by opening that thing up. Remember, getting some stuff done in the beginning when you're trying to learn to invest is better than being perfect. Now, the third thing I would do after I've started to read more books and learn more about the language of money, and after I'd open up my brokerage account and also get the 401k match at the job if they offer it, the next thing I'd do is I'd figure out what is my investing philosophy. Now, this is huge, okay? Because personal finance is ultimately personal. This is a thing that makes you different than other people, your own personal investing philosophy. Very few people that I've talked to have ever written this thing down. And when I say write this down, I mean actually write it down, either on a spreadsheet or a piece of paper, but you got to put some of this stuff on paper first. What is your core beliefs about businesses or about money? Maybe your core belief is, I don't chase hype. Or your core belief could be, I want to invest for 20 years down the road. Or you want to buy quality things, assets, right? Or you want to stay diversified. You need to figure out what are your core beliefs. And then you want to also, when you're writing your plan, figure out what is your risk tolerance level. How much risk do you want to take based on your age, based on when you want to start pulling from the money to use to live for everyday expenses, right? And then what are your investment goals? What is your investment rules? What is your checklist for when you want to buy stocks, or checklist for when you want to buy ETFs or index funds, right? Or what is your checklist for when you want to sell stocks, right? You got to start putting this whole thing together. You got to ask yourself, look, when I'm doing this written plan, why would I ever buy a stock or ETF or index fund or bond? Why would I ever sell it? How much risk I'm comfortable taking? And all of these things become your investing blueprint, your plan, right? And your plan is specific to you. right? Because this is you that we're talking about investing. Oftentimes, when you see people on the internet giving investment advice, they don't have you in mind. And so if you're coming up with how you're going to invest and you're starting out, one of the things you got to do up front is figure out who you are in this investing game, what you are comfortable with, what you like, what you don't like, what you can tolerate, what you can't tolerate. You got to know you. Now, the fourth thing you got to figure out is exactly how much you want to invest. Don't invest just what's left over at the end of every month. You need to figure out what you plan to invest and commit to that amount. Make it a bill. Make it like you paying one of your expenses every month that you put towards your investment. In other words, commit to an amount and pay your future self first. Treat investing the same way you treat rent or mortgage or your insurance or your utilities, right? Make it another monthly bill. Decide on an amount and automate that amount every single month. Stay consistent. Now, the fifth thing you got to do is you have to decide what fits your plan. What should you be investing in that's going to fit your ultimate plan that you wrote down? So when you're deciding what actually fits your plan, don't ask just, what should I buy? Instead, ask the question, what belongs inside of my investment plan? What is out there that fits what I ultimately believe and want to achieve with my core investing philosophy in terms of growing my money and building wealth? Depending on your goals, you'll have to choose, should I do ETFs or should I do index funds or should I do a mix of both? Should I also have some individual stocks? Should I have some bonds? You'll have to figure out if these things fit inside of your plan. And if something like REITs doesn't fit your plan based on your philosophy, your core beliefs, your checklist, what you want to achieve, your risk tolerance, if it doesn't fit, it doesn't fit. See, when you're talking about exactly what should I invest in, what you should invest in is determined by the plan of yours, your own personal, written, customized plan. That's what determines whether or not this stock or that stock is good for you. That's what determines whether or not you should be heavy in the industrial sector or heavy in the energy sector, whether or not you should have value stocks or growth stocks. Here's the deal. Don't build your investing plan around an investment. Build your investments around your investing plan. That's why you got to have a written plan so you know what goes in there. Now, the sixth thing I would do is make sure I'm using AI as a part of my research tools. And when you do that, AI is not making decisions for you necessarily, right? You're making the decisions. AI is just there to help you with research. If you went to your favorite AI tool, whether it's Claude or ChatGPT or Perplexity or Gemini, whatever it could be, you need to plug in your philosophy that you wrote. You need to plug in, here's my risk tolerance that I wrote. And then you need to plug in, here are my investing rules and checklist. And then you also maybe need to plug in the 10K or 10Q from whatever stock that you're looking at, or maybe some of the information from an ETF or index fund that you're considering adding to your portfolio. Then you just need to prompt the AI tool, and you can use that tool to help you evaluate. So if you want to invest in an individual stock, you don't have to read the 10Q and 10K anymore. You could go to that public company's website, pull the latest 10K or 10Q, and just take that PDF, upload it into AI, and let AI do the interpretation for you. You can ask AI, hey, where does this particular stock or index fund align with my goals? And where does it not align with my goals? You can ask AI to do almost anything. We should be using AI to learn about investments, learn about companies, compare companies and ETFs and index funds, help do our research, and of course, help us understand financial statements and understand our risk and how it plays into individual investments. Look, we don't use AI to replace our own judgment. We use AI to help us make better decisions about what we should and shouldn't be investing in based on what? Our plan. Now, the seventh thing you want to do is you want to master your emotions, right? Your emotions can destroy your entire portfolio, guys, faster than a bad investment. So you want to avoid fear, greed, right? Fear of missing out, panic. You got to avoid all those things. The stock market is going to reward discipline, not emotion. See, the best investors, they know how to stay calm when everybody else is emotional. The eighth thing that I would do if I'm trying to learn how to invest is I would make sure I always consider risk, right? You got to respect risk. Every investment, whether we're talking about cash, we're talking about bonds, we're talking about individual stocks or ETFs, they all involve risk. And there's all different types of risk, but you have to understand how to consider risk in terms of everything you purchase. Don't chase just returns. Be careful about that. Don't just chase high yields on individual companies that give out dividends, right? Understand the risk that come with everything that you're investing in. A good investment for one person may be a terrible investment for somebody else. Now, the ninth thing is stay consistent for decades. This is what you want to commit to doing, staying in there for the long haul. Building wealth over 20, 30 years, it takes consistency. It takes continuing to do the right thing over and over again. And I like to tell people just dollar cost average, which simply means that you place a certain amount into an investment at certain set intervals. $200 a week, $400 a month, $300 every time you get paid. Discipline over the long stretch is the key. Wealth is built through consistency, not getting hyped all of a sudden because of an exciting stock. And the last thing I do after I've done all this is vow and commit to becoming a better investor year after year. In other words, you never stop learning. You never stop improving, right? You continue to understand diversification, competitive advantages, right? The quality of businesses, the quality of ETFs or index funds or bonds, and who you are as an investor will evolve and change over the years, right? But you continue to learn about businesses. You continue to become a better and better investor because the better investor you are, the better financial decisions that you're going to make. Here's the deal, guys. If you notice something, guys, about today's video, it wasn't about trying to find the perfect stock. It's not about that. It's not about trying to predict the market. That doesn't necessarily make you a better investor. It wasn't about trying to get rich quick either, right? It's really about building a system, right? Because systems is what creates consistency in your investing, right? Consistency is what ultimately builds wealth. And that's exactly how I would start if I was investing for the first time in 2026. Look, if you got value from this quick video, do me a favor, smash the like button and share the video with anybody who you think needs to hear it or somebody who you think wants to learn about investing. And drop a comment and let me know if this type of video is helpful for you. Look, the best person who's going to take care of the old you is the young you. Until the next video, peace.